Quantum Computing is an innovative company developing next generation cutting edge technology. If you're interested in this stock, here are a couple of things that I think you should know about before you make an investment decision. Of course, there's a lot more that you should know, but at the very least, these are some things that you should know about this company before deciding whether or not it makes sense for you as a long term investment.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right. So, one of the big announcements from the company's latest quarter was that they secured their fifth project with NASA. And so that's good news that the company continues this relationship with NASA. The funding from that project will help grow the company. But more importantly, the relationship and the evidence based on that relationship will facilitate growth in other categories. It will help the company secure funding because lenders and investors will look at this and say, well, if they are working with NASA and NASA is giving them deals, then they're probably more legitimate and they'll be more interested in making that investment. So that was good to see that the company developed and continued that relationship. So they went on to say that revenue in the quarter totaled approximately $101,000 compared to $50,000 generated in the same quarter last year. So they more than doubled the revenue, but it's still a very small revenue base, very small, especially when you compare to the company's expenses, which I'm going to talk about a little bit later. The revenue number is still very small. It's nice to see that it's growing rapidly, and you want to see exponential growth in this category in the upcoming quarters. And then, of course, in 2025, you have the opening of the manufacturing, and that's coming out in Arizona next year. Hopefully, that will help facilitate more growth for its business. So, this increase was due to the increased contract sales, primarily with their contract with Johns Hopkins University to deliver an underwater quantum LiDAR prototype. However, the Johns Hopkins project has a lower gross profit margin than the NASA LiDAR project. And I will say this, gross profit margins at these early stages is almost meaningless for the company. It's okay that it has lower gross profit margin. It just needs to make sales, make contracts, deliver on these contracts, and make progress, get feedback from the opposite side of the transaction. What worked well, what didn't work, what improvements would they like, what changes would they like, and continuously make progress on that front and find more commercially viable applications. So these are applications that they can fulfill. And then from the learnings of these applications, they can make the next step. So this is vital data for the company to make progress. So it doesn't matter if the gross profit margin is a little bit higher, a little bit lower. It needs to get these deals. It needs to secure these deals, fulfill on these projects, and then move forward from there. So I highlighted that it's a small number of revenue compared to cost, right? So the third quarter totaled 5.4 million in expenses, total operating expenses, compared to total operating expenses of 6.6 million in the same quarter last year. So this was a decrease, a $1.2 million decrease, and it came as the company realized, hey, our expenses are far outpacing our revenue, and we should probably slow down a little bit given the rising cost of capital, given that revenues are not materializing as quickly as we thought they might. So let's kind of slow things down. But the company's balance sheet, as I'll talk about later, is okay. It's in good shape. It's just the rising cost of capital. You want to be more prudent. You want to give yourself longer runway to give yourself more time to develop this technology. So total assets at September 30th were 76.8 million, which was up 2.4 million from the same time last year. So the cash and cash equivalents balance increased by 1 million from the end of 2023 to approximately 3.1 million. The company in the third quarter raised net proceeds of 7 million in a secured convertible debt financing. So they are raising capital. They are raising capital because, like I shared with you earlier, the amount of money they're spending on operating expenses is far outpacing the revenue, and they need to slow that down. Otherwise, they're going to run out of capital and they're going to need to keep going back to investors to get more and more money. They want to slow the cash burn so that they hit milestones before needing to raise additional capital. Each time they hit a milestone, it makes it easier for them to raise capital. It lowers the cost of capital. The stock price increases every time they make an announcement of a discovery or an innovation or a step, a contract, whatever the achievement might be. It causes an increase in the stock price, which lowers the cost of capital. Also, at the even after the end of the quarter, the company raised an additional $4.5 million with their at the money market facility. So that means they should have over $7.5 million of cash. Well, they shouldn't. It's hard to make that conclusion because even though they did add 4.5 million to the $3.1 million balance, they also probably burned through some of that cash in operations. So yes, they probably have somewhere around 7.5 million of cash, maybe a little bit less, but it's good that they continue raising capital. And then the discovery from Alphabet and the innovation from Alphabet and Google and their quantum research will help facilitate more investment interest in this category, which will help the company raise more capital. So total liabilities at September 30th were 11 million, which was up approximately 5 million compared to the end of 2023. And they're going to keep raising capital. They're going to keep needing to go back to investors, and their balance sheet is already getting stretched. And so it's important for the company to be prudent and hit milestones so that when they go back to investors, they can have more to show. So they believe that over time, the TFLN facility can serve as a source of stable, non-dilutive cash flow while market demand for quantum computing catches up to their manufacturing capabilities. And remember, they are launching that Arizona facility early next year, and they plan to have manufacturing online from that facility early next year. And so it will serve as a source of cash flow for the company, which they desperately need. And at the same time, with the facility up and running, they can go back to investors and say, look, we've got this facility up and running. Here are the unit economics of this facility. If you give us this funding, it'll help us get to this next stage, which will then generate even better unit economics for the business overall. So really interesting things here from quantum computing, their finances and how they're managing their finances so that it'll give them time to achieve these breakthroughs in quantum computing. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.